Hey guys, what's up? Spen here. So in today's video, I have a very high conviction trade for you. I think this stock is going to double in the next 6 months to a year. And so this is a short-term trade for me. It's not a long-term hold. I'll probably hold it for around 6 months to a year, but it is a high conviction trade. I think that I'm going to kill it on this trade. And so in today's video, I'm going to lay out the research I've done. I think you guys are going to really like this trade, so make sure to comment down below, give me your thoughts on this trade, and make sure to drop it a big thumbs up and subscribe if you want to see more content like this. So the stock I am talking about is Olin Corporation. Now Olin Corporation is a boring ass company. This is an American manufacturer of ammunition, chlorine, and sodium hydroxide. Not a super fancy company. However, this is a great trade opportunity right now with some serious tailwinds underneath it. So one of the main portions of this company is its chlorine business. Now, chlorine has had a massive scare recently because the news has been going around saying that there's a huge chlorine shortage. In reality, there wasn't a chlorine shortage. I've listened to all the earnings report of a bunch of different companies. However, ever since the media start pushing this chlorine shortage, people have gone out and they're buying chlorine like crazy. Here's the Google trend chart for you. We got in the blue chlorine shortage, in the red chlorine. You can see the charts are absolutely spiking, and this is on the 5-year. Obviously for the blue, there's never been a chlorine shortage, so it's always flat, but you can see it spiking here. Now the reason why this is a good trade opportunity, because this is going to have a material impact on the company. Now another thing I want to mention, they have a new CEO just as of September 1st, 2020. This guy is turning around this company, revamping it, and he's focusing on higher margins and not so much higher volumes. And that was the problem with this company before. So the market isn't even pricing in how this company has changed. Let's get into some of the exciting details though here. So jumping over to their Q1 investor presentation here, let's look at this. So they lifted our 2021 adjusted EBITDA outlook to a range of 1.8 to 2.1. I think that this is actually going to be 2.5 they're talking about, might even be 3 billion. 2.1 is on the low side, believe it or not. I think we're going to come a lot closer to 3 at the end of this year, which is absolutely phenomenal. Just for reference, guys, this is a company with a 7 billion market cap. I'm going to get into the valuation in a second, and you're going to be blown away. And another really important thing to note, that preview the activities to move adjusted EBITDA to 2.5 billion per year and beyond. This is so important, and I'm gonna explain the importance of this in just a second, but this completely changed this company inside out. The fact that this is gonna be 2.5 billion per year and beyond. I'm gonna show you guys more on that in just a second so you understand the magnitude of him saying that. And this is all a part of his end the cycle pattern, having that sustained EBITDA of 2.5 billion plus every year. Now here there's 4 different phases that he's working on to change this company. You can see it says here next few years. If you actually zoom in, $100 a share that he thinks this company should be worth in the next couple of years. 100%. I think right now, today, this could be a $100 stock. And I'm going to show you guys that valuation, like I said, in just a second. So scrolling down, I want to show you a few more things that are really interesting. So net income. So get into the financials. I know this is boring, but it's really important to actually do this due diligence, guys. So 3 months ended March 31st, 2021 to compare to 2020. 2020, we had negative 80 million. 2021, 243 million in the first quarter. And this is not a fluke. This is going to be sustained. This company, guys, I'm super excited about. Getting more into it, I want to break down this revenue for you guys. So the 3 main sources of the revenue is the chlorine products here, epoxy, and Winchester. Yes, they own Winchester as well. And Winchester scored a huge Army contract just recently. So keep that in mind. So with the chlorine products, you can see the 3 months ending March 31st, 2021, we had 271 million in net income compared to negative 34 million here. Epoxy as well though, up almost 6-fold compared to last year. Winchester, 85 million compared to 10 million, literally up 8-fold. So again, this is not a fluke. There is so much demand for ammo, guns, chlorine, all of this stuff right now, and it's only becoming more in demand with this whole chlorine shortage now, which, they're gonna blow out their next quarter. Another thing I want to show you guys though is their Winchester segment performance. So their year-over-year performance here. You can see their revenue has literally doubled in the last year, and their adjusted EBITDA, so this is their adjusted EBITDA in millions, has gone up 396%. And their chlorine products is very similar. So the chlorine products adjusted revenue is only up 14% because they're not focusing on volumes, as you can see here. They're focusing on margins and lowering operating costs. So they're paying down a ton of debt with all of this new revenue, or rather net income, I mean. So they're using this net income to pay down debt, increase their margins, lower volumes, and it's working out amazingly. The CEO has the right ideas. You can see that their adjusted EBITDA, again, up 360%, and this is going to be sustained. This isn't a fluke. It is going to be very elevated compared to how it's ever been in the past. Their epoxy business used to really struggle back in the day. This is actually really improving as well. The revenue up 39% and adjusted EBITDA up 163%, so that's really nice to see as well. Now, I want to show you guys something really interesting, and this is going to scare you here, but I'm going to take away those fears, don't worry. So we look at their whole chart dating way back to the 90s. You can see this is a very boom and bust company. If I zoom in for you guys, you can see it booms, it busts, it booms, bust, boom, bust, boom, and then bust back in March, or actually rather September here, and then you see this line just goes straight up. And this is going to scare a lot of investors, and I'm the same. This worried me a lot when I first saw this until I dug deeper into this company and realized this company isn't what it used to be. So this doesn't mean we can't see a correction. We could see a 20% correction. I'm not going to time that though, because I think the stock is going to $100, so I'll just average down. I don't really care about that. But guys, this is going to be sustained, and let me show you why. So I went into macro trends, and I've already compared everything that I could possibly compare and research in this company throughout its history. The key thing though is its net income. So if we look at its net income, throughout the history of this company dating back, you can see back in the day, okay, they were bringing in, 44 million net income, kind of in this low range, pretty consistent though, nothing too dramatic. And then you can see that, okay, we went negative, and then a little bit positive. Nothing exciting here, but then in 2017, huge jump all of a sudden. Okay, getting interesting. 2018, huge jump, but you can see it goes right back down. Huge jump and right back down. That is the thing you need to know, because in 2017, 1231, if we go to the chart and look when that was at the end of its peak around here. It peaked right up here when it had that huge revenue increase, and then it crashed because it's not sustaining that kind of net income. It has never sustained a high level of net income. It kind of just booms and busts and doesn't do anything too exciting. Now moving up to where we are here, you can see the recent quarter is 244 million. So you would think, okay, 244 million, we just killed it. Stock is way up, we should bust next, right? Well, the thing is, this isn't going to come in at, 33 million or 44 million. This is going to come up probably at 250 plus million next quarter, and every quarter after that is going to be in the 200 to 300 range for net income. This is actually sustained now. So this chart isn't going to reflect what it used to do in the past. This is a completely new company, and the beautiful thing is they have this chlorine shortage fire underneath this company that is driving so much demand. There's also the Second Amendment movement that is causing people to buy a ton of ammunition, and inflation on ammunition is also increasing. And with inflation, this company makes a lot more money. So the more inflation, the more this company makes. And if we actually go look what analysts are saying, analysts and the company is all saying this is going to be sustained. So looking at its earnings estimate, we can see the average estimate here. So this year we're saying 5.1 EPS, and next year we're saying 5.22. So they're saying right here, this isn't going to just crash back down. This is actually going to increase. This is going to be a new sustained company. And same thing with the revenue. So revenues this year, they're calling for 37% increase. That's because last year was a terrible year for this company. The revenue isn't going to increase a ton with this company. It's focusing on net income, and that's really what's important. With the current projections of net income, guys, this is going to be a PE of 8. very cheap company in today's world. And as you can see here, they have 8.92. So right around that 8 level, very cheap company. That theoretically means if you bought this company right out, in 8 years, you could have it paid out clean. And yeah, that's just very hard to find right now, especially with the whole catalyst of the chlorine surge that's going on. And so it really represents a great trade opportunity, regardless of the stock being up 400% over the last year. Don't look at the price, look at the story of the company, look how it's progressing, understand it's a completely revamped company. And another thing that actually helped them was last year in August, there was a fire at the chlorine plant. And this really cut down the supply and the amount of chlorine that's out there. It's a huge supply and demand game with this kind of stuff. More demand, less supply, prices are going to go up, and that's also helping the situation with this company. So anyways, guys, that's all I have for you in today's video. Again, make sure to comment down below. Give me your thoughts on this trade. I like you guys to poke holes in my thesis. What are you worried about? You know, poke holes in it. I love other people's opinions. And if you did get any value out of this, make sure to drop this video a big thumbs up. And feel free to subscribe if you want to see more content like this. And I'll see you guys on the next video.